that Attorney Sean, some of the items that so let me start over since we just started the recording. I want to make sure we get it all on here. I know how it works. Look, hey, this is part of life. Technology is teaching us all, how to be on our A game. So I totally get it. So I'm Candy Martin, and I want to thank Miss Jeanette, and I want to thank Dr. Trina for the invite to come on and share with you all some of the little bit of what I do with the tax strategy workshop. Some of the items may piggyback off of what Attorney Sean went over. I believe it was last week. So some of the things that I know that he went over, I will kind of skim through those, won't spend a lot of time there, and I'll get more into strategizing how to set your business up as a business professional, especially when it comes to taxes. A lot of times we're just so talented and we're awesome at what we do, and we're just doing what we do. We're working in our gifts, we're sharpening our skills, and we're out doing what we do. And we forget about the business side, which includes taxes. I mean, let's just face it, it's not one of our favorite things. When I was in school, math was not my subject. And so a lot of times when we think of taxes, we think a lot of numbers and equations and all the fun stuff we don't want to talk about. But you're gonna find tonight that it's a little bit different than this adding and addition, adding and subtraction, and multiplying and moving spreadsheets and all that. So I'm gonna talk more about the concept of taxes and not necessarily getting everybody to break out their calculators and pens and paper. So I'm just gonna kind of go ahead and get started. As the gentleman that introduced me mentioned, that we want to put all our questions in the chat. What I would like to do is to go through the entire presentation first. That way, if we have our note takers, they like taking notes. And if we have those that need to think about and digest the information, that'll help them as well. And then above all, it'll help the recording, just in case someone wants to edit it. It doesn't make it as much editing they have to do if we're breaking for questions. So what I would like to do is go through the entire presentation. I will skip over a few slides because it is information that you've already had. And what that's going to allow us to do is to get all the way to the end. Then we can dive into the Q&A session. And feel free to use the chat because I'm sure toward the end, correct me if I'm wrong, but I believe your name is Freddie that introduced me.
Yes, ma'am.
Okay, all right, Mr. Freddie. So he is going to help with the Q&A, making sure that I don't miss anybody's question. And then from there, we can wrap it up. And I won't hold you guys long, I promise. All right, so I'm just gonna dive right in. They wanted me to do a little background. So here I am. I'm a financial educator. I'm also a business advisor. I teach people how money works, and that means personal money, business money, just money in general. I have an Associate of Science degree in marketing. I have one in advertising, one in business management. For those that like to check the boxes, I got a little credential there. I am currently celebrating it as a blessing that this is year 25 in business for me. So 25 years of business. Nothing teaches you like life. Uh, so I thought I'd throw that out here. But I am a registered tax professional, certified with the IRS, and so with all that and all those other things that I do, I am a licensed life health and accident agent as well. And you'll see how all that ties in together. So the importance of having a tax plan, that's why tax strategy is one of my favorite things. Tax and business strategies are two of the favorite things I love to do when it comes to teaching people how money works. The importance of having a tax plan, you don't leave anything up to chance. Planning ahead of time can help you save money. It can help you increase your income. It'll help you achieve better results. And if you were to get audited, having a tax strategy, you already have your ducks in a row, all your I's dotted, all your T's crossed, and you're just rocking and rolling right through a tax audit. And I tell clients all the time, you live long enough, you'll get audited. Your number will roll around. So it's not the end of the world if you get audited. It's an okay thing if you have your ducks in order, and if you have your paperwork and your documentation, and a tax professional that is willing to help you through that process. The problem comes in when you get audited. Things are so disorganized and all over the place. That's what causes the challenges in audit. So hopefully, I will get a chance tonight to kind of help you guys put things in order. At least let's get the process started. And for those of you who are A1 when it comes to your taxes, you're on top of your tax game, hopefully I'm able to offer a few things tonight that'll help make the process even easier. 3 ways, these are my top 3 things. I always talk about taxes. There are 3 ways you can be taxed. You can pay taxes now, you can pay taxes later, or you can pay taxes never. And all 3 of those options are legal options, and that's what we can discuss through tax planning. What things that you do causes you to have to pay taxes up front. What things you do allow you to defer it. And then there are some tax-free things that a lot of us don't know about that we can keep some of our money without having to pay taxes on it legally. All right. So let's get right into this. So even though I know for the most part, everyone that I believe the audience is geared toward business owners, solopreneurs, those that are artists, you know, you may have employees, you may not, it just may be just you. But we always in business, I always start with the personal, because never forget, as a business owner, you are still a person and you have personal responsibilities that tie into your business. A lot of times people say, well, just get a business and just put everything in the business and you don't have to worry about it. No, you still have to have your personal tax affairs taken care of as well, because if you don't, it will and can cause issues down the line. All right. So our personal 1040, some of the things I'm going to kind of go over, and it'll all tie into business by the end. Having your documents, which would be, any W-2, if you have a health savings plan, if you took money out of retirement, you're getting Social Security, all those personal things that don't necessarily have a direct tie to the business, but you still have to include it on your tax return, your tax credit. Do you have any dependents? Are you taking care of a parent? Do you give charity donations? So I know that this is Ladies in Film, so perhaps you have some charitable donations to this organization, which is if it's monetary or if it's even charitable miles or time that you bestow to the organization. All of those things take into an account your filing status, your tax liability, your dependents, and the things that you give away. A lot of times as business owners, we'll answer questions for people, or we'll come on and, hey, I'll do that for you. I'll talk to so-and-so, and we do those things. And we forget that those things have a personal value as well as a business value. So we'll get into some of those. All right, so on the business side, we are going to, and what we can do, if you have, during the Q&A session, if you have a question about anything personal-wise, go ahead, feel free to put it in the chat or write it down, and we will come back to some of those if you have it. But I know for tonight, we're mainly focusing on business, but I don't want to not answer any questions if you have a general question that we may can, have time to get to. Because remember, the business owner is a person. So you may have some personal tax questions. All right, so let's get into some of the business things. A business tax break. The benefits of owning a business: you have tax breaks, you have legacy building, and you have income generation. So what I mean by that, as a business owner, you have the privilege of paying your taxes after all of your deductions. So for example, if you don't have a business and you work at a retail store, and at the end of the week, they give you a paycheck, but they've already taken all their taxes out and you get what's left. Well, in a business, you get to earn the income, deduct all of your expenses, and then pay taxes on that number after all of your expenses are taken out. You don't pay the taxes up front. You earn the income, you deduct your expenses, and then you pay taxes on the profit, which is where you can get a tax break. That's where they get that from. Owning a business, it gives you the opportunity to do legacy building, such as setting up what's called a solo K. If you have a 9-to-5 job, you're familiar with a 401k. That's where your company matches what you put in into some sort of savings. Your company is the owner of that 401k account, which means they have the say so as how much they're going to match, what companies you invest in and what you can and cannot do with that belongs to that company. Well, as a business owner, whether it's you're a gig worker, if you have a registered business with an EIN number, you can actually develop a solo K, which means your business, you team of one, team of two, or however many employees you have, there is some sort of savings that you can set up, which we call a solo K, which now means your business can now help you prepare for retirement. And there are some things in there, of course, some stuff, it's not just 1, 2, 3, but there's some things in there. But I just want you to know and have the understanding that you don't have to just work for a big company to have a way to save for retirement, a way to plan for your retirement. There are still some things that you can do along the way as a business owner, as a small business owner. You have things that you can do. And income generation. So as a business owner, properly preparing for your taxes can help you safeguard the income that you generate. What you don't want to do is work hard and put forth all your effort and have all these great successes to have to give it all away, or the majority of it, to taxes. That means somewhere along the line there was no tax planning that gave you the information that you needed to make sure that you're properly earning income, properly paying your taxes, and having that space where you can save money for your future. So this was one of the items that I know that that was taught in the previous section. So I'm just going to kind of go through this. I'm not going to spend a lot of time here. If you're able, take a picture of the screen, screenshot it. This is some, really basic understanding of what an LLC is, what is a limited liability company. I believe Attorney Sean did an awesome job explaining these. So this is just to be a refresher. An LLC, you get to file that with your personal 1040 tax return. Corporation means you have your personal taxes that you file with your 1040, and then your company comes back and file its own taxes. It's two separate entities. Your S corp, as a limited liability company, you can take an S corp designation, which means you have shareholders, you split the profit, and so forth. So when it comes to tax planning and tax strategizing and coming up with a way to make sure that you're, like I tell people all the time, it's not about how much money you make. I mean, that's great, but I don't care if you make $1 million. If you have to give away 99% of it, you still got the same $1,000 I got. So you want to make sure that you are picking the proper setup for you, which is, should you be an LLC? Should you be a corporation? Should you be an S corp? And there are some other options, but which one is right for you? You do need to understand the differences. So here on this screen is a really good breakdown. And so I don't want to spend a lot of time there. I just kind of want to get into strategizing after you pick where you're going to go. Now it's time to do some tax planning. All right. So your business, you're in business, hopefully, whether you are an artist, a singer, an actress, actor, you own a retail boutique, you own a restaurant, whatever your thing is, your business, your baby, your passion, you want to make sure that you select the right entity. And you want to have a way to know, are you making a profit? Now, if you're just a philanthropist that's just doing this out the goodness of your heart and don't need any money, you just want to give everything away, then this may not be the conversation for you. But if you're saying, hey, I have a skill set, I have a talent, I bring value into this industry, into my community, and I would like to leverage what I do and get compensated for it so I can enjoy my work. There's nothing more rewarding than getting paid for something you love to do. All right. So you want to make sure that your business is making a profit. And so we're gonna talk a little bit about how to make sure of that, because there's no need of talking about taxes if we don't even know how much money we make. All right. So a pass-through entity. So if you're wondering what we talked about on the previous screen, once you pick which one you're gonna go with, if you're gonna go with an LLC, S corp, or a corporation, there are some that have no federal tax on the entity type. So you want to know if that's something that interests you. For a sole proprietorship or a single member LLC without an S corp designation, you file the tax return and business information on a Schedule C. So basically, if you have an LLC, you just file it on your Schedule C. If you're in a partnership, you will have to file a Form 1065. And if you're operating as an S corp, you're going to have to file Form 1120. And so that's why it's so important to know what type of company you're going to set up, because depending on the type that you set up, it's going to determine what type of taxes you file. All right. So if you're running your own business, paying yourself is essential. I run into this a lot with small business owners. They have their Cash App, Venmo, PayPal, whatever method, or they have a small business account at a bank and they have a business card. They are earning the money. The money is going into that app or into the bank account. And then when they need something, they just swiping the card. And we need to make sure that everything is separate. We want to make sure that the personal account has its own bank account, or however you want to do your personal money. But your business needs to be all for business transactions, whether that's expenses, payroll, income coming in, and then the business itself can pay you, the owner. So an owner draw, and what I mean by that is, let's say you make $100, just for easy math. Let's say you make $100, and you say, you know what, this week I'm gonna pay myself $50. It's your business. You can pay yourself $1 or $99. It's your company. But what you don't want to do is just directly swipe the card to pay your light bill. You want to pay yourself. Hey, I want the business. It's going to ABC company is going to write Cheryl Jones a check for $50. You take that $50 check, you cash it or put it into your personal account. That transferred the money from the business to you personally. There's so many different reasons why we want to do that. All right. So, well, one right off the bat that I'm going to say is to keep you separate from the business, whether you're an LLC, S corp, or a corporation. You definitely want to have some sort of bridge between you and the company as far as it coming to money. And a lot of times people get that, they're like, hey, I own the company. Why should I have to bother with writing a check or doing a ACH transfer, or, however you're going to transfer the money from the business account to personally? Why should I even have to go through that step and not just swipe the card? Well, everything that happens with that business account, it clarifies that everything that was used for it belongs to the business. So for example, if you pay your personal home light bill with your business card, just swiping it, you haven't paid yourself or haven't put anything in between, in the event that someone was to sue the company, because you're using the company money for your personal usages, everything you personally own belongs to the business as well, which means not only can they sue your company, if you own a home, they can sue you for your home. That would go into the it was $500 worth of damages or whatever it was worth $500. But because you show this enormous access, you got a house, you got cars, you got all these things. Now all of that has to go into the court docket to show how much you're worth. Oh, by the end, they're like, you know what? Pain and stuff, and all of a sudden they got that. They got all these other problems that they can now sue for because they have more money that they can have a chance at. But if you just do the one thing, and that is to separate you from your business, that's where we get into that liability company or the corporation or the S corp. That separates you personally from your business. That is your safe haven. But if you're not operating as a business, then now your business and you become one. Then everything that the business does, you're personally responsible for it. And everything you do personally, your business is now responsible for it. There's no separation between the two. The two are now one. It's just like a marriage. So what you want to do is you want to be single on both sides. Like, hey, I have my personal account, I have my business account. But when you marry the two, now both are just entwining with each other and there is no separation. So it's very, 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 very important. I don't care if you perform, you sing the national anthem once a month at a baseball game and they give you $50. Treat it as a business. Even if it's something that you just, hey, this is a hobby, I just bake cakes on the weekend, whatever, treat it as a business. It only takes one thing or one person to make that all an issue, okay? So I think I have had my TED Talk for the moment on that. So I want to explain some things to you about paying yourself. And oftentimes when we're small business owners, gig workers, performers, artists, we don't tend to do that. We earn some money, we pay the bills. We have forgotten to put a barrier between the two. So there are some things that you need to know about paying yourself. An owner's draw or distribution, that involves transferring the funds from your business account to your personal account, like basically just swiping it. Owner's draw aren't necessarily tax deductible. That's why you would want to make sure that it goes through a proper way of payroll. Just making one little change takes it from being non-taxable to now being something that you can claim as a tax write-off. Owner's draw does not reduce your company's profit, which means that doesn't change how much taxes you pay. It does not give the business a credit. If you use the credit card or you withdraw money out, it's called an owner's draw just so that we'll know where the money went, but it's not a tax deduction because it wasn't in the form of payroll, okay? With a sole proprietorship or a single member LLC that isn't an S corporation or a partnership, you are not legally required to pay yourself a W-2. You don't have to. However, as a tax professional and as a 25-year business advisor, I strongly suggest that you do. And a lot of times when I tell people, oh, you should pay yourself with a W-2, they're like, oh my God, that's extra paperwork, I gotta pay for payroll. But what would it cost you if you didn't do it that way? Remember when we just talked about how when you don't separate the two, you're now open for lawsuits, and you don't get the tax write-off. So it's you just gotta. It's gonna be time consuming. It's gonna be some work involved. Either way, you just gotta pick which way you rather go. Okay. Payroll. There are so many things you can do online. I don't know if anybody in the group has a payroll company. This would be a great time for you to advocate for your business or kind of get it out there. But it is something that you can set up yourself, especially if you are a one-person business. It could be, it's very easy to do, or just pay a few extra dollars and let somebody else do it. You know how they say, get somebody else to do it? Get somebody else to do it. Trust me, the money that you pay for somebody else to do it is tax deductible, you know. And so we got to start thinking as a business, even though when you get that EIN number or when you exchange time for money and somebody pays you for your services, you are a business. Whether you want to do all the business stuff, the IRS look at you as a business and they're not going to treat you different because you say, well, it's just me or I just have one employee. They're going to treat you with the same due diligence that they would somebody with a large retail store or someone with a restaurant. You got the same responsibility. The only difference is you're running the show on your side, but they're going to still want bookkeeping, payroll, taxes, all of those responsibilities that come with earning money. It's still going to be your responsibility unless you're going to go work for someone else, get a check at the end of the week, and let them be bothered with all that. And then you don't worry about it. You just be an employee instead of an employer. Okay. The difference is you are employing yourself. And a lot of times business owners have an issue with separating them from the business because they're saying, hey, I own the business and it's just me. Well, guess what? When you put your business owner hat on, you got to do payroll, taxes, and bookkeeping. Okay. All right. Partnership. You know, all of those things have to be when you have a partnership or when you have a corporation, of course, and an S corp, you have to do a W-2 to everybody that earning money from the company. So why should you do W-2 payroll and a 1099 for yourself? So it depends on your business. Every business, should you do a W-2 or a 1099? It depends. I'm going to talk about me for an example. I'm going to use me. Not going to put anybody else out there. I'm going to use myself. I pay myself with a W-2 and a 1099. Why is that? Anytime that I do office work, like reconciling the bank accounts, calling clients, reminding them about their appointments, bookkeeping, all of those things are called administrative tasks or things the secretary would do. All of those things would fall under W-2. The 1099, which is my intellectual property, which is my ability to teach classes or to give advice, you can't necessarily put an hourly wage on it. So that becomes now a contract between Candy Martin and Martin Business Solution, which is the name of my company. So Candy Martin gets a 1099 from Martin Business Solution for teaching classes or for doing things like that. So for example, if you are a actress and you go out and you perform at a play, and after the 3-month run, your company pays you for acting in the play. However, you'll get a 1099 for that. But however, what about the times when you had to get on the phone, set up the audition, send in the tape, put stuff in the mail, all of those admin things, reconcile the book, those type of things become what's called W-2 payroll. And so if you have somebody working with you, determine the role. What did they do? Was it something administrative or was it something based on skill set? And so depending on your answer, that will determine should they get a 1099 or should they get a W-2 or both, because it's very possible. All right, next thing, you'll be taxed on the profit, which is the sales minus expenses and payroll. It's pretty much if you bring in $100, you got to take out the taxes, you got to take out the internet that you had to use, the cell phone call you had to make, the paper, the flyers, the business cards, all of those things come out. All of the payroll, remember, not the owner's draw, but the payroll is now being able to be deducted so that you don't pay taxes on that. You only pay taxes on the profit, okay? It is important to note that the owner's pay is not considered an expense. Remember, if you don't run it through payroll, you just take some of the money out because you're the owner and you can, that is not tax deductible, okay? Accurate bookkeeping and understanding your tax obligations are very, very, very important. Are you supposed to pay taxes once a month? Are you supposed to pay them every quarter? Are you supposed to pay them at the end of the year? Understanding how your entity is taxed, how your income earned is taxed, is going to also keep you from getting fees for not filing on time. There are more taxes than just income tax that you file by April 15th. There's sales tax, they have payroll tax, unemployment tax. So it just depends on what are you participating in that will require you to have another tax file. All right, some tips for tax filing and bookkeeping. Bookkeeping tips, record all earnings. A lot of times we only record the money that we made once the dust settles. No, record every dime that comes in because expenses are based on, you can't write off what you don't have. If you only showed you made $100, how can you write off $500 worth of deduction? Not, the math ain't mathing. So you want to say, hey, I made $1,000 and I had $500 worth of expenses, so I only have a $500 profit. Trust me, reporting the income helps you in the long run. It helps you when you get ready to do an investment. It helps you when you want to buy a home. It helps you when you want to buy a building. It helps you when you want to apply for credits and things that says, hey, if you earn some money, we can help you. If you don't record the earnings, it will look as if you did nothing and made nothing and you showed a loss. You show a loss, the business is at risk. Reconcile expenses in proper categories. This is so, so important. If you purchase clothes for a photo shoot, then that needs to go under advertisement because the photo shoot was used for flyers and for promotion packages. It was not a uniform. Just putting things in generic categories or not really understanding where they go can cause you to have audit problems. Now, so you get audited. So you put this in a uniform, you wear a uniform that you're required. Uniform that if you're not required to have uniform because it doesn't work for a company, that is not tax deductible. But if you bought the clothes for a photo shoot or for a certain role, and they said, hey, you have to wear pink in order to be in this play, Now you got to go out and buy a bunch of pink clothes. Okay, that is part of it. That's part of the advertisement. That's part of your packaging for, for whatever. Like sometimes I know they do casting calls and they say you have to wear all black and you have to wear this or you have to wear that. Okay, that all goes into that. Make sure you're putting it in the right category. That's like the best example that I could come up with. Have a system. How are you doing your bookkeeping? Everybody doesn't have to use QuickBooks. Matter of fact, I don't advise you to use QuickBooks unless bookkeeping is your business. QuickBooks is for bookkeepers, CPAs, accountants, tax professionals. We use it because we got to use all that fancy stuff. We don't need all those bells and whistles. Sometimes you'll pay for something you don't need. And QuickBooks, let me tell you, if you don't have proper training on how to use it, it will be a nightmare. One little thing off, and now you're just stressed out, hair pulling out, and you know what? Just forget it. I'm not bookkeeping anything, just whatever. Because it's a very good program. QuickBooks, I'm a QuickBooks pro, so QuickBooks is a very good program, but it's not designed for someone who's not doing a whole lot with it. If you just needing to, hey, capture your stuff for the week, just a few little things here and there. There are other programs that you can use. I suggest something called Wave App. I'll stop and put it in the chat really quick. I like that for small business owners and for solopreneurs and for gig workers. It's really good. It's user friendly and it's free. So I know we like free. That helps save us some money right there. So that's something, or if you old school pen and paper, get your notebook. If that is the way that you're gonna keep up with it, but here's the thing. If you're gonna do notebook or a ledger, you have to be consistent. And if you have to turn it in for something, it has to be legible, okay? So I do things on pen and paper, then I transfer to electronic. I don't know, maybe it's just a phobia that I have. I just gotta have it on paper for some reason, but that's just me. But I am telling you, so I'm kind of double working because I put it on paper, then I put it in a computer system. But you don't have to do that. Pick which way you're gonna be consistent. I don't have a preference. It is your business. What are you gonna do consistently? What are you gonna keep up with? Is it a notebook? Are you responsible that you're going to keep up with that notebook all the time? Are you going to know where it is? Okay. All right. So, because guess what? Before computers, that's what we had. We had ledgers. We didn't have electronic spreadsheets and QuickBooks. We had pen and paper. So it can be done. Select the software that fits you. Just because everybody else is using it, you got to make sure that it's something that you're going to use consistently, something that you're able to use, something that's user friendly and that is cost effective to your budget. Okay. Audit preparation. Whenever you're doing your bookkeeping for your business, I don't care if you're earning $100 a month or $100,000 a month. You have to have your bookkeeping in order. Have your books in order. And when you get them in order, think about this. If someone was going to audit you, what would they need to know? So when you do your bookkeeping, reverse your role. Bookkeep as if you were an auditor. What would the auditor want? That's what you put in your books, okay? Tax filings, there's quarterly taxes, state, federal, and local. And depending on what type of business you're doing and how you set up, some of these taxes will apply to you. So that's why I said it's so important to know what type of what type of entity you are and what taxes are required. Okay. If you sell tangible items, you have sales tax. And those are due generally once a month. And there are some other things depending on the state that you're in. Unemployment tax, workman's comp, general liability. You have your annual income tax, and then you have some credits that you will get for paying taxes. So you make the money, you pay the taxes, then you file the taxes, and then you prayerfully get some credit for paying the taxes. I'm like, can I just keep my money? Y'all keep your money, and we won't have to worry about taxes. I mean, that's where I'm at with it. But it's just one of those things. So a lot of times people say, well, what can I write off? What's considered a deduction for my business? So here on the screen, I have a few. I'm going to come back to cell phone. I'm going to skip that one for a second. You have payroll. Remember, we talked about W-2 versus 1099, contract labor versus employee. If you're giving somebody a 1099, so you don't have to pay the taxes, but they're working for you as an employee and you give them a 1099, that is a tax violation. A 1099 goes to a contract labor, okay? Which means that a person says, hey, my company is going to come in and do a service for your company, and your company is going to pay me. At the end of the year, I'll get a 1099. An employee gets a W-2 because an employee is told what time to come, what to wear, what to do, and how much they'll get paid. They get a W-2. You cannot give somebody a 1099 that you give all the rules to. So for example, if I come to you and I say, Martin Business Solution, we are going to do your bookkeeping for you. On my own terms, I own my own company. I'm offering a service to you. You pay me at the end of the year, you can give me a 1099. But you can't give me a 1099 if you tell me, okay, Candy, you have to come to work. I'm going to pay you $12 an hour. And you got to be here Monday through Friday from 9 to 5, and your job is going to be bookkeeping. You have to give me a W-2, which means I have to have unemployment tax and all those other wonderful things. Advertising and marketing, those are tax deductible. Marketing, your Facebook, if you do Facebook ad, if you take out an ad in a newspaper, whatever, your marketing, if you hire a social media person, that's going to fall up under your marketing, okay? Food and travel. If you travel and you just so happen to have family with you or any of those things, you got to make sure that you keep a good ledger of what was personal and what was business. If it's a business lunch, make sure you're talking about business. All right, you're giving out business cards, you're giving out business advice, you're doing something over this meal that correlates to your business. I hope everybody caught that. All right. Workshop, attending workshop, going to conferences, going to national competition, going to workshops on how to become a better singer, and all of those things become tax deductible. Professional development, taking a class on communication. I don't care if you just play the guitar, but you want to go take this speaking class on how to communicate. That is all professional development. That is tax deductible. Office rent, or if you're a home-based business, you work from home. Just the space that you work in is considered home-based, okay? Carve out a space, not the entire house, that is considered for the business. It should be some things in that area, a laptop, some certificates, some books, something that says, hey, this part of the house, even it might be one little corner of the house, whatever it is, that particular part is for the business, okay? All right, so let me go to the next slide. All right, so these are some other things that you want to consider when you are a business owner and you're looking for things that you can write off on your taxes, or what can you do to better your business, put your business, even in the, not just for tax write-off, but to have a good viable business. You want a tax professional. This is your team. And a lot of times we have business owners that are just them. Hey, it's just you. But if it's just you and you don't have an in-house tax professional, get one. Outsource it. You need a creative director. You need someone, you need clients. You got to have an administrative staff. You need to have a financial advisor. This is just as if you were going to be working out. You would want a nutritionist. You would want somebody that's going to work with you in the gym. You would want somebody to advise you on what type of gym clothes to wear. I don't know. So it's the same thing as if you was a business owner. You want to get a tax professional. You want a financial advisor, or if they can do this, if one person can do both, that's great. A creative director. Hey, what direction is my business going to go in? I need somebody that's going to market and advertise me so that I can make money. My mindset. I have to have an owner's mindset. I can't think that just because it's just me and I bake cakes on Fridays and that's all I do. You still have to look at it as a business. You know, treat it as if you were a Fortune 500 company. If you treat it like that, you act like that, you operate like that, you will be that. Okay? Take it from me. Client. You definitely got to have some clients or customers to be in business. And so these are the things that you would have to make sure that you have in place regardless. You know, so if you are, like I said, baking cookies or cakes just on Fridays, you know, just because that's what you love to do and you make a few dollars doing it, where's your client database? Where are you keeping your client? If you were to ever get audited, they're going to ask about that. Like, hey, who are your clients? Let me go back a slide too. I think I forgot the cell phone. Yes, I did. So what made me remember was talking about the clients. If you want to write off your cell phone bill on your taxes, what a lot of people do is they, you know, no matter how small the business is or how big the business is, a lot of times they want to write off their cell phone bill. Well, you can't write off the entire cell phone bill. Sorry to rain on your parade. If unless you have a separate cell phone, one for your business and one for personal. If you use your same phone to make one personal call or to make one business call, it is not exclusive for the business. So you can only write off a portion of that. That's where your client list come in. Based on your client list, that's going to determine what percentage of that cell phone bill you can write off. So every client that you have, you need to have them in some sort of database or some sort of ledger to verify, hey, I took an 80% claim on my phone bill on my tax return because I have 8,000 clients or whatever, you know, the ratio is. You gotta have proof that you have clients in order to be writing off the cell phone bill and other things as well, not just for the cell phone, but and then it's good business. You want to have a good way to and you don't and don't just use your Facebook friend list as your client list. No, we need these people in some sort of database where we need an email list. We need something. We all know, I think it's during COVID when Facebook decided to go on a little vacation or Instagram, a lot of people were like, oh my God, I just paid for something and I can't reach out. Get an email list, get a client database with cell phone numbers, addresses, get that developed. All of that is part of doing business. And that also proves to the IRS that you're a real business and you have real clients. Just one or two more slides and then we'll open it up for Q&A. Why you don't want to wing your taxes? And of course, I'm gonna, you know, put myself out there, but I mean, I tell people all the time, get to a tax professional that's gonna listen to you. Doesn't have to be me, of course. Get you a tax professional that's knowledgeable, that's gonna understand your industry, even if they've never dealt with your industry, that they're willing to learn it, because there are certain things that apply to certain industries that don't apply to others. So you don't want to wing it. This is something that you don't want to wing. I know a lot of times I get on Facebook and somebody say, I'm looking for a tax professional, and there's like 20 people under there saying, do it yourself, do it yourself, do it yourself. Guarantee you, they either got somebody else doing theirs or their stuff was real simple. They had one W-2 and they've been at the same job for 30 years. Okay, nothing's changing. There's nothing exciting going on in their life. They're probably okay. Otherwise, get you a tax professional so that you don't be getting audited and having to pay all this money back. But tax professionals do, and I know a plethora. It does not, you know, I'm just saying, I just know some really good tax professionals. They provide planning and strategy advice to you so that you can get ahead of it. You don't want to wait till you get an audit letter to now want to come up with a strategy. They can represent you, help you with the IRS, make certain phone calls. They know what questions to ask. I'm kind of skipping through some of this. They provide guidance on tax deductions, which is what we did a good bit of. And they help you maximize your tax savings. And they offer support in bookkeeping. And now let me throw this disclaimer out there. All tax professionals aren't bookkeepers, and all tax professionals aren't CPAs. That we're not all. Bookkeeping is a service that I don't offer, but it is something that I do, but I don't offer it to the general public. So just because I'm a tax professional don't mean I want to do bookkeeping. And some bookkeepers aren't tax professionals, just like some CPAs aren't. So just those are different functions, but sometimes you will find a tax professional that does it all, or a CPA, vice versa. So you got to ask the question, do you do taxes? Do you provide tax services, tax planning? Or are you just a CPA that certifies the tax document? And are you a bookkeeper that will help me get my books in order? Those three functions are totally different. And they generally have different services and different price points. All right, so here's our solution screen right before we open it up. We want to plan. We want to plan to minimize our tax liabilities. Trust me, the goal is to get to zero. You don't owe them and they don't owe you. Getting a refund is not the come up. We want to make sure that we keep our money in our pocket. They don't need our money. I take care of me and my business, and IRS take care of their business. So the goal is to get to zero. So minimizing your tax liability is the goal. That means you either paid the right amount throughout the year and you're able to keep your money throughout the year. Make sure that you're taking advantage of all that's available to you for your tax breaks and credits that won't have your business at risk showing a loss. Avoid penalties, meaning file your stuff on time. Find out what taxes you're supposed to file, because the penalties and interest is not money you get to keep. It's just money you basically give to the government, and I'm sure they can make it without your money. Mindset. Remember we talked about getting organized, treating your business. I don't care how small or how big it is. You have to treat it as a business. Getting organized, staying up to date on the tax laws, or getting a tax professional that you trust. And even in that regard, I always like to tell my client, you're not going to pay me and I just go and work some magic and I just give you a sheet of paper back. That's not how this thing works. We're going to work on this together. You're going to have some skin in the game. We're going to get in the trenches together, because I want you educated on what's on that document, because guess what? You are 100% responsible for what's on your tax return, whether you knew it or not. Ignorance is not an excuse when it comes to the IRS. They don't care that you didn't know. You signed it, you're responsible. So make sure you have a full understanding of what's on that tax return, okay? Be proactive. Don't wait until the last minute. Start thinking about your taxes. Hey, and this is not judgment or condemnation. Look, let me tell you, this just happens to be my thing, taxes. It could be some other things. But what I am saying is, regardless of how it used to be, today is a brand new day. Let's start over, and let's not wait till the last minute. Let's start thinking about your taxes more strategically, and not just, hey, I gotta file these taxes at the end of the year. You can use your tax return for so many things. You can use it for investment. You can pitch your business idea to investors and provide your tax return as collateral. Like, hey, this is what I'm doing. You can go to a bank and get a loan. There's so many things that you can do with your tax. You can even pitch for a business opportunity and show, hey, my business is viable. This is the history. So when you get ready to sell your business, if you want to sell your business, now you have tax returns to back that. It is so many things you get to do with your tax return versus just signing it and at the end of the year beating the April 15th deadline. Start thinking, what can I do with this tax return? All right. And always be accurate. If you're gonna owe money, then hey, let's set up a payment plan, or let's pay it all at once, but be accurate. If you're going to get a refund, claim it, get it, but make sure that you're truthful and accurate, because what you don't want is to deal with a tax audit and not have your ducks in a row. All right, so take action. If you want more information, whether it's for taxes, I have free workshops that I do all the time where we can actually go through these things. I do financial planning. I do give initial consultation at no cost, where we can go through an assessment, find out where you are, find out where you want to go. That costs you $0 to take advantage of that. And I do have some workshops that you can attend as well. For the most part, most of the workshops are complimentary. There may be one or two that have a fee, but for the most part, most of the workshops that we do are virtual. There are some in person if you're ever in Louisiana. And I do travel. I come to Dallas and I also go to Mississippi. So, but a lot of what I do is online and a lot of it is at no cost. So text the word tax, TAX, to 985-326, 9297. And I'll send you a link where you can go and either look at the classes or schedule a no cost consultation where you can at least get the information to find out if you're on track or not. Maximize your success, plan and strategize for a stress-free tax season or tax planning, for longevity. Don't leave your legacy to chance. You're working hard. You are putting in the work. Don't build this business up to leave it to chance because you didn't have your ducks in a row. Let us help you with your legacy planning. With your, whether that's wills and trusts, if that's insurance, if that's taxes, whatever your legacy planning strategy needs to be, let us help you with that. Take a proactive approach and plan ahead. This will help you leverage a stress-free tax filing season, and it can be used to your advantage. All right, Q&A. Thanks for being here with me, and I am going to turn it over to Mr. Freddie to get us back, back on with the Q&A.
All right, Ms. Martin. Very good, very informative. Go look in the chat and see what we have here. Okay. I don't know if you can see it.
Okay, I can pull it up. All right.
I'm just going back to the first.
Okay. All right, I see it. Miss Angelica, very good question. She said, can ACH payments from your business account to your personal account be considered payroll tax deductible? So there's two ways to answer that. Well, there's two answers to that. If you just transferred it, like, hey, from Waller Industries to Angelica personally, no, it cannot. That's just an owner's draw. Back in the day, you used to have to go in and fill out a deposit or withdrawal slip and take it out. This was just a way to get it done without having to, you were able to do it electronically. That is not tax deductible. What is tax deductible is you had some sort of payroll service or some sort of payroll software that the money technically went into that, and then you got a ACH from the company, long as it was a pass-through. And it wasn't just, hey, transfer from account A to account B. I hope that answered your question. And I think you can unmute if I didn't.
You did. I think my business bank does a wire transfer for ACH, but I wasn't sure. It's like it takes a few days and they charge you. But I am familiar with Wave, and so I'm thinking I'm probably gonna start using that.
Yes, because if you set it up with a software or a payroll company, I suggest using a software if you can.
Right.
If that's something you can do until you get to the point where, like, hey, I gotta hire a firm. That's all. That's the goal. But having that layer of cushion there would definitely, because at the end of the year they're gonna give a 1099 or a W-2, and that'll be your proof that it was actually for a payroll.
Okay, got it. Thank you.
All right, the next question was, what are some good software you suggest for record keeping other than Excel? A Wave app was one. I'm trying to think. There is a spreadsheet. Excel is pretty good. I mean, if you're good at Excel, you're the envy of a lot of people. If you're not good at Excel, then try Wave app. There's QuickBooks. HoneyBooks is really good. They have some bookkeeping components to it as well. Let me see who else. I'm not sure, but mint.com was more on the personal. I'm thinking they're still around. And then also your tax professional may also have, I have a tax software that I use that allow business owners to track their expenses. So you may want to also give the tax professional, they may already have something that you could use at no additional cost. And so I'm hoping that I answered that question. Let's see, can I use the same EIN number for Uber and being a comedian, or do I need a separate number? So there's answer A to that. Of course, you can use it for whatever. It's more about how you have it set up. If your EIN says, I don't know, your name, someone use a name for an example. If your EIN says John Uber Services, you want to, if the name says it, then you want to use it just for that. But if the name says John Enterprises LLC, then you can have a DBA, meaning John LLC doing business as an Uber driver, John LLC doing business as a comedian. You know, in that regard, you won't have to have a separate EIN. But if it says John Uber Service, I would suggest that you get a separate EIN or change the name and change the structure of the company to have a enterprise or a John and Company, or John Enterprises, something that's more universal, so that you can do multiple things with that one EIN. And that would be something that I suggest you talk with your tax professional or business strategist before you make any changes. Let me put that disclaimer out there. Before you guys make any life changes, check with your financial advisor or your business strategist or both before you make any changes. All right. It says, if you're giving away services from your business, should you create an invoice, and how should you? Yes. Create the invoice as you would originally create the invoice that if someone was going to pay you for that service. If you're not registered as a nonprofit, you definitely want to utilize this invoicing. You would send you can discount the invoice, like, hey, I'm taking 50% off, or I'm doing it 100% off, whatever the numbers are. You want to show on that invoice the original amount, the discounted amount, and you want the person to either sign that invoice, or if it's a click and pay type deal or whatever, you want it to be acknowledged that they got it and that they understood that you were gifting or that you were discounting them that part, because that is the part you get to write off on your taxes as services rendered or accounts receivable unpaid, things of that nature. In order to properly write it off on your taxes, the original amount of that service or product needs to be stated on that invoice. Great question. All right. Any other questions? Oh no, thank you. Great question. That was a great question. All right, Miss Tiffany, did you have a question? Okay. If not, Mr. Freddie, anybody else? Any more questions or any comments, concerns?
No, I didn't see anybody else. I would really, I learned a lot as well, and the separating your business account from your personal account, not mixed, that was huge. I didn't understand that tonight and how important
Oh
that
yes,
was. Yeah, you did a great walking through all
okay.
this.
All right. Well, I'm glad to have been here. Let me see, 2 6. I'm putting in the chat just in case you didn't. If anyone wants to, I'm not sure, Angelica, about the recording. That would be a Miss Jeanette question, and I want to make sure that everybody keep Miss Jeanette listed in prayer too as well. On this evening, I believe it was her mom that passed. I can't remember. I've had a long day, but we definitely want to keep her lifted. But we definitely, if anyone is interested in anything that I said, you want a free consultation that costs you nothing, not gonna try to sell you anything. Trust me, my plate is full. But if you would love to have a no-cost consultation, I would love to extend that offer to you all. I would love to learn more about what it is that you do And you can text the word tax to 985-326-9297, and I'll send you 2 links. One will be for the consultation and one will be to learn more about how money works. I think we all can we can all be smarter with money. It was not taught in school. It just was not something that was at the at the kitchen table a lot. Nobody's not walking around making sure that we have our I's dotted and T's crossed. This is something that we have to get in the trenches and find out for ourselves. So I am on a mission to help change that, especially for small business owners. I want to get out and reach across the world and get as much of this information out as I can. So that's it for me. If there's no other questions, I truly appreciate Ladies in Film for having me, Miss Jeanette and Dr. Trina. Thank you for the invite.
Thank you so much, Ms. Martin. Thank everybody else tonight.
All right. You guys have a great night.
All right. Good night.